Sure. So Starbucks is the largest coffee house in the world. They've got 29,000 stores globally, which includes 14,500 in the US and 3,300 in China. So they have been very successful at building a customer base that is very loyal because they offer them a premium coffee product which is very much personalised to what the customer is looking for. And they've been able to roll that out across all their stores consistently and to provide it very efficiently. The other thing they do, which I think differentiates themselves, is they offer customers a place to go outside of home and work where you can meet a friend, have a coffee, just relax alone, catch up with a business colleague, which is something which is differentiated and which others have not been able to replicate, which we really like. The other thing they have is products in consumer packaging. So whether it be coffee, whether it be teas, which go into supermarkets, and they've been successful selling those, particularly in the US, but they have an opportunity to expand that globally. So there's a number of things around the way it's positioned, the brand, its marketplace, but then also the growth opportunities. So it's a habitual product. People keep coming back to it. They've got this loyal customer base, which we like. Unlike other things, because it's an experience in and of itself, technology is not going to disrupt that business. You want to go, you're going to drink your own coffee. You can't send a robot to drink your coffee. It's difficult for people generally and for companies generally to provide a personalised product that you can do in a way that's repeatable and customisable, and they've been able to nail that. So that's something that's very attractive because it's difficult for others to replicate. Now, as we think about the growth opportunities, they're also very attractive. So in the US, which admittedly is the more mature market for Starbucks, but they still have store growth opportunities, particularly through the middle of the country and in the south. They are introducing a bunch of new beverages, which, whether it be tea, refreshers, cold nitro brew coffee, there's a range of different things. And in addition to that, people are adding food increasingly to their beverage purchase, which is a growth opportunity for them. They have recently expanded their rewards program to be more accessible to more people. So previously you had to preload your Starbucks coffee card, whether that be a physical card or a digital card, and that cut a lot of people out of becoming a member. They're expanding that now so anyone can access that program, which is great and provides, frankly, the more a member generally comes and spends up to 2 times what an average customer does. So expanding that is a real growth opportunity for them. The other thing they're looking to do is to expand their digital relationship with customers who are not members. And so that's important because it allows them to communicate with customers that maybe they come in once a week or once every couple of weeks, but trying to get them to visit the store more often. Now that's an initiative they just started a few weeks ago, and they've already accumulated 6 million customers into their database, so that's a real growth opportunity for them. The other thing which I think is really interesting is China. Now this is potentially a multi-decade growth opportunity for them. So to put some context around it, they've done a very good job of building a great brand there. The Chinese middle class is going to double over the next, or is forecast to double over the next 5 years or so. The average Chinese consumer drinks less than 1 cup of coffee a year. In the US, the average consumer drinks 300 cups of coffee a year, so it's a huge growth opportunity there. If you look at the population per store in the US, it's about 20,000 people or so per store. In China, it's 500,000 people per store. And even if you just look at the middle class of China, that's 100,000 people per store. So there's a great growth opportunity in terms of the number of stores just amongst the middle class in China, and that middle class is growing. So we see that as being really attractive. The other thing which I think is really interesting is they have recently signed an agreement with Nestle. So Nestle is the biggest coffee company globally in terms of retailing coffee. And Starbucks, while they're very strong in the US in terms of packaged coffee that you get in a supermarket, or their coffee pods that you put into a coffee machine, they've got a very small international presence, whereas Nestle is in 190 countries around the world. They're very well penetrated, and they've signed an alliance so that Nestle will market the Starbucks product. So that's a real growth opportunity for them as well. So we like all of those things, whether it be their market position, but also their growth opportunities, which is very interesting. Now, in addition to their revenue growth, you've also got a cost-cutting initiatives, which are ongoing at the moment. And then the company has said that they are going to return $25 billion in capital to shareholders through buybacks and dividends between 2018 and 2020. They've got about $20 billion left in that program. So that's about 30% of the current market cap, which they're returning to shareholders over the next 2.5 years or so. So that's really attractive to us as well. Yeah, we see a couple of risks in particular, and there's a short-term risk, which is around the trade war going on between the US and China. And the risk there is that the Chinese consumer decides that they don't want to buy US products for a period of time, which might go on for unknown, but that could be a short-term risk, or what we see is to be a short-term risk. The other risk is that for some reason, the company's had some issues in the recent quarters around their afternoon and how many people are coming into the stores. And the risk is that a potential leader for broader issues across the business. Now, we don't think that's the case because we're still seeing really strong numbers out of the morning day part and out of their lunch day part, but it is one of the things that I think the market's been thinking about.